Cava cutting its full-year forecast for the second straight quarter as young diners pull back on visits. Joining us right now is Cava's co-founder and CEO Brett Schulman. And Brett, thank you for coming in today. It's great to see you.
Yeah, great to be back. Thanks for having me.
All right, let's talk a little bit about what you're seeing, because there's been a big pullback, not just for shares of Cava, but if you look at Chipotle Mexican Grill and Sweetgreen, some of the stocks that, people looked at this as, wow, these are not restaurant stocks. They are massive growth stocks. And that growth has slowed down to a certain extent. What happened?
Yeah, it's moderated. For Cava specifically, we actually grew revenue 20% year over year. And our same restaurant sales, we had a harder compare. So we actually accelerated from Q2 to Q3 on a two-year basis from 16.5% to 20%. Now, we have seen a moderation in sales this year with younger consumers. You know, they are facing headwinds, whether it's student loan debt repayment or some of the things like you saw in the big issue here in New York City in the mayoral election, housing costs and other inflationary pressures that they're feeling around them. So we're continuing to work to put our best foot forward and drive our value proposition with our Mediterranean cuisine, our differentiated Mediterranean cuisine, so that we can welcome more people to our table.
So the consumer group that got hit the hardest is 25 to 34-year-olds. How much of your demographic is that demographic? Or how much of your consumer is that demographic?
Yeah, we span all generations, but they are a good portion of our core customer. And what we saw is we actually grew market share with that group, but that their frequency year over year had waned a bit, given that they didn't have the tailwinds and the spending power they had last year with all the inflationary pressures they've been feeling.
You mentioned student debt loans kicking back in. That was a big issue?
Yeah, we saw that when that kicked in. We saw some softness kick in with that age group. Obviously, there's different areas that are pulling their disposable income, their spending, that might be pulling away from restaurants in general. And, that's why we have worked since 2019 to underprice inflation. I like to say this is a marathon, not a sprint for us. We're trying to work every year to improve our relative value proposition. And when you look at restaurants as a whole, the restaurant industry raised price 34% in aggregate. At Cava, we've raised less than 17% since 2019, and CPI was up 27% during that time. So we've improved our relative value proposition each and every year, but the restaurant industry, transactions have actually gone down 7% since 2019. So, I think consumers are saying the industry as a whole has gotten too expensive, and that's why we've continued to work to improve our relative value proposition. That's translated to mid-20s in traffic for us, same restaurant sales since 2019.
Same-store sales, though, were what? They were 1.9% versus expectations of 2.8% for the most recent quarter?
Yeah, slightly under expectations. And again, some of the headwinds we've seen and the recent government shutdown and
the government shutdown, you're big because you guys started off in Virginia, D.C. area. Right?
Yeah, and we didn't see an impact at first, but as, government workers didn't receive those paychecks, understandably, we saw some softness creep in. Not acute, but a little bit of softness, and that's why we trimmed our guidance because of all the uncertainty in the coming months. We wanted to be conservative and judicious about our outlook for the rest of the year.
In terms of the margins, I think there was some commentary on the conference call last night, concerns around the margins you're going to be able to maintain in the restaurants. Why is that? What are the pressures there?
Well, we did have a little bit of excess spending on repairs and maintenance, so we want to keep our physical plant really well and our equipment running and our dining rooms on point. We did absorb about 20 basis points in tariff impact because, again, we don't want to pass that along to our guests. We want to put the best value proposition forward and work on behalf of our guests to absorb some of those costs. And we see low to mid-single-digit COGS inflation next year, so nothing that we can't handle or absorb, but certainly, keeping an eye on being mindful of it.
Where do the tariffs hit specifically? Some of the food that you have to import?
Yeah, so we do import the majority of our ingredients domestically, but things like olive oil from Greece or some of our hormone antibiotic-free beef from Australia, New Zealand, and then basmati rice from India. There are tariffs on all those countries to varying degrees that we've seen, have a bit of an impact.